All right, today is June 19th. As far as day trading this week, today I didn't realize it was a bank holiday, and still got up to do my routine, my trading routine, get up early, go sit in front of the charts, start my NWOGs at the beginning of the week. I don't like to trade Mondays too heavily, so I usually ease into it anyway because I find that Mondays aren't my best days. So I usually just kind of slowly get into it, don't really get ready to jump in anyway. Easy into the week sort of thing, but I like to keep the routine. And so I didn't see that it was actually a bank holiday today during the weekend. Had a bit of a busy stuff to do, but still perfect. Take this opportunity, not trade, and realize that, stick with your routine and go through, maybe take a look at the week ahead and see if there's any potential areas for time and price to pan out so that there's some setups here during the week. So without further ado, let's start at the top. First things, obviously, we got to look at that economic calendar, and it doesn't even say it here, but it's a holiday, and it's a bank holiday as far as like big brokers are concerned. So that's why the slow volume today. And it actually wasn't until I saw the slow volume and then I opened the calendar, I was like, oh, that's what's going on. But Mondays, nothing going on here. Tuesday looks like the first viable trade days, and Friday also looks like a trade day for me. Wednesday and Thursday, because Fed Chair Powell is testifying at 10 o'clock. I don't really like to trade when he's talking until after he's done talking, because I find that the volatility can be a little outside of my scope of wanting to play. So this might be afternoon session only trades, but I'll take a look before. I'll sit in front of the charts, obviously, and watch it, see what happens. But that extra piece of keeping an eye on when he's talking and how long he's talking for, I'm not a big fan of having to do, because it opens up an extra element of stuff that I don't really want to calculate, a little extra risk for me. But I'll still take a look, but I'm gonna keep that in the back of my mind that Wednesday and Thursday might be out of it to me today. So for those days. So economic calendar sets us up so we can see the charts next. All right, starting off on the monthly chart, the very lonely monthly chart on our ESU 2023. Yep, we've done the rollover already. And for me, ICT Trader, I'm taking a look at consequent encroachment of that order block there, seeing that as a potential place for a little bit of a bounce backwards down. Definitely gonna hit down on this thing is what my first thoughts are when looking at this. So I'm gonna come down, take a look at the weekly, see if we got any fair value gaps or anything else. But ultimately hitting the middle of that, it's usually gonna give a little bit of a bounce, if not a complete retracement. So let's jump to the weekly. Weekly for me, I like this motion we've got going up here. It's really reaching for that gap, and we've got a gap and we've got a void too. So the void, I'm thinking, is the ultimate finish point here. And if we take a look at NQ, I guess let's pull it up real quick. We can see NQ on this chart is just sky high. And that's the only thing that makes it a little more difficult. Obviously, if we end up over to NQ here, we can see that he was reaching for some of this liquidity here. We still have this fair value gap in the weekly up here that he can reach up into if we're looking at the smoothed out NQ1 exclamation point. So he still has room to go up. I don't like it when he's gone too far past liquidity and everything else is still lagging, but let's go back to this point, and that's still my ultimate target for the week, and even it was last week. But who knows, whenever that finishes up, that's kind of the main thing I'm checking out here. And as you can see, I start my charts empty. I like to refresh each week. So starting off each week, having an opportunity to go over it again and with a fresh set of eyes, I think is actually kind of important. So I just habitually do that as a practice. So that's why there's nothing on here, and I like to go through it. And even if I clear it, just to clear it and refresh again, I do that all the time, just refresh and get it going. So there is a fair value gap. I have this as my indicator over here, the 175, 50, and 25 of my fair value gaps. I just do those instead of any of the symbols, the colors. I do when I drop down to this. So I'm going to be taking a look at when this guy closes. I'm going to be putting myself in here, an actual box that will show the color. But for now, the other things I'm taking a look at is, yes, we could drop back down to this puppy here. I'm thinking top of this. We obviously have the top of this thing here, which I'm going to denote with a white line. That's what I use. That looks like something that we could come and hit on top of. We have our fair value gap, weekly fair value gap. Actually, I'm gonna change this to orange. Orange is the color I use. The colors I use, I just kind of go monthly down to seconds. So this is weekly, daily, etc. So that tells me that's a 4 hour, that's a weekly fair value gap. That there just tells me that's a high that we've passed. If it's green, it means it's liquidity I'm looking for. So I'm looking to come down into that first, and I'll approach what it looks like as we approach that. But yeah, weekly, we're starting on a negative side. We're going down. This was today's. So when I came in this morning, this is what I also had here. I put this, changed my colors. That's my fair value gap for the day. That's daily fair value gap. I anticipated a retracement into this, and as you can see, we did bounce off that 50. So I could put this in here as well. When we get to the lower time frames, this will help me see what we've got going on in there. But yes, we did hit that consequent encroachment or mean threshold. Which one's which? I can't remember right now. Mean threshold is for fair value gaps. Yeah, so on the daily, not much I can see over here, obviously, because of the contract we're trading. That's the only thing I'm looking at. And the only other one, the next available point that I'm gonna take a look at would be 50% of this wick. So I'm gonna put that in there as well as a 50%. So those double lines there, I guess I could change this to yellow too, so I know what's going on. Yeah, that's probably good enough for me to think, yeah, we're gonna do something around here. Then I'm gonna jump over to my hour. And the next thing I take a look at, for me, looking at this, I'm obviously looking for longs. My bias is towards that gap up top, which, there it is up there. I look at this and I always play off of premium or discount. So that's really a big thing for me. That's always been a big thing. So from this point to this point, I have this set up, premium discount, which I've got this little light blue, and obviously you can see I've got a very red theme going, red and yellow theme going on, so it helps see it. This is where I do my premium and discount is the first thing, especially when I see an expansion like this, going into a consolidation. I'm looking for that consolidation to stay around the 25% mark and then retrace to 50, possibly even down to 75, and if we get past 100, then I'm really looking for reversals. So for me, quite often a lot of trades I will take will be on the way to the 50 or on the way to the 75 from up here, from this consolidation after an expansion. So today, I'll take a look, but there was a trade in here that I could have taken, but I just didn't. I did a demo on it just to see it pan out, but there is one little version of something in there that I would have taken because of the Six Sister on ES here himself. But looking at ES, yeah, for me, I'm seeing it hit the 50. I'm seeing that at the 50% of that fair value gap on the daily, right? I am realizing that we haven't come down to this one. And we also haven't hit this weekly sort of high or monthly and weekly high. So I'm looking, hey, that still is an option out there. We have this 1 hour fair value gap that we're in here bouncing around in. And so if I take a look and put this extra color here for everybody, let's do that 1 hour, that's a green, we're in that. So for me, I would need to see some sort of leaving that before I was super happy. I'd have to see some, measure of a fractal down here that I was appreciative of, that showing me we're actually going up. So again, being Monday and being a bank holiday is a good chance it's just gonna be slow and consolidate anyway. So I'm looking into Tuesday, hopefully seeing that we've bounced out of this and moved down to the 15. I'm actually gonna be taking a look at this specific 2 chunks here. And then I'll make this a 15, even though it's 2 fair value gaps. If we look a little closer, I'd actually be taking a look at that puppy, crossing back past that. So for me, everything we saw here, if we go back to the hour, well, if we go to the hour, I guess we could go to the 4 hour. That's an order block. That there is an order block that I am looking for. Obviously it took us down and we're here yet to close and maybe give us a fair value gap. So I'm imagining this as being the point to cross past and continue north if it wants to. So when I come down to 15, whenever I look at order blocks, that's what I look for, is I look for a distinct down and up pattern that gives me an order block that I wanna go through. And if you go check out one of the guys on YouTube, TT Trades, he's probably talking about it the most. The term about it is called the box setup, which I always liked. But yeah, it's one I've become very fond of. And this is the point where I would be looking at cool, we're going north. I need that qualifier to be met, where we either have some strong force into it or strong force past close, come back, and then do a bounce. So that's what I'm looking for. Yeah, and obviously we just got to see what happens for the rest of the day. We can still reach down to here. We have a lot of resistance in between going south before we want to go north. So I do just have to let time do its thing and kind of wait to see what ultimately will pan out. But yes, my bias is north. I'm thinking that what we're gonna have is a little bit of a zigzag here, and then maybe something that'll give us some motion up past this and going north, taking this liquidity and heading on into this. It's a big ways. You know, I'm asking of it about 100 pips to get up here. So that's probably a weekly range in my mind. If we come back to the week and we take a look at what the candle's done so far, if I were to guess ahead of time, I'd say this is gonna come down, wick, and go up. But because that is a big gap, we could do another one with a wick and come up. So I'm still holding out for this ultimately, but you just gotta play the lower time frames until something presents us with those biases north that we like. Bouncing off that 50 is a pretty good one for me, and hopefully it continues further north. So the trade I did see this morning, that was something that it's a little small, obviously not enough volume for me to want to trade real money, but playing it as this same fair value gap that I had just mentioned, I would like to see this passed either way to give me a bias intraday, right? So if I see this thing swing through this way south, I'm biasing south for the time being. Ultimately, on my higher time frames, I want it to go north, but doing really small stuff, getting into 5 minutes below all the way down to the seconds, I'd be like, cool if this is gonna go south. What I had seen, and I actually have one of these puppies here, so let's head on over to, let's do this. Let's load this time frame for you. Let's open up my big boys. All right, so if we take a look, okay, cool, we're still connected. All right, so here's that same fair value gap that I'm talking about right there. That's on ES. So we're looking at ES, NQ, and then, can you really see the cursor? You really can't see the cursor. So far right is YM, NQ is in the middle here, and then ES is on the left. So if we take a look at those lines, we can actually see that this is the same fair value gap here. This is the same fair value gap here. That's the equivalent. And obviously if we're trading these guys, we like to see them all have a representative on the similar, on each other. So I do see all of that. And you can see ultimately what we did do. We did go through it. But what I was looking at, if we take this up onto the hour and we bring all these puppies down. So if you noticed before when I was taking a look at the hour, my first thing was to do the premium discount. Premium discount, premium discount, premium discount on every one of them. I like to do this on the hour because it's very easy to see visually, sometimes the 15, but it's pretty easy. At the time, I was sitting about 8:30 back here on an hour. It did move down, but it hadn't hit 50. Everything else had hit 50. The long and short of this is that YM and NQ had hit the 50%. The three of them have a tendency to do the same thing. So I quite often can use that six sister concept, if you're familiar with Michael's version of that, to get that third one, which is not there yet. So whether it's going to any one of these 50, 75, 25, I've been known to trade that a number of times to get that one to fall in line. And so the ES was the only one not there yet. And if I went down to the lower time frames, if we were looking here, this first little macro is this white line here. That first macro was my point in which I was starting to see a little bit of hesitancy. We passed my fair value gap, which I had mentioned is sort of like an inversion fair value gap, although it's not. Technically, the middle of it would be the inversion point. So the consequent encroachment or mean threshold of that fair value gap, or the consequent encroachment of the fair order block. Basically passing it was where I would be looking for a retracement up to it, somewhere in here, and looking for it to go south to the 50%. Now, obviously, this is why we're not looking, and that would have been my stop there, and this is why that would have been my trade. So a 1.85, not the best risk-reward ratio, but still something that could have been taken, but the lack of volume was not what I wanted it to be, obviously, and ultimately, taking a look at the fact that YM still hadn't also passed its own fair value gap over here on the right. So taking a look right here on YM, it hadn't gone through it. I didn't like that point there. But coming back here to take a look, the NWOG for the week is actually right here. So the NWOG's right here somewhere. It's one of these. Yeah, it's into that one, so it's there to there. Cool, it's like that. So if we go down to the lower time frames, my response to this is this fair value gap caused it to want to bounce, usually expecting a 50% retracement. Okay, same sort of thing. I would have done this, boom, 50%. I'm just doing it kind of rough for now. Let's get rid of the old one. I'm looking for it to retrace up to here as a minimum. It doesn't retrace up here. It hits the NWOG and stops abruptly. That abrupt stop gives you one little bit of confluence. The second part of confluence is that this order block over here, you see another one of these large fair value gaps? Boom. Also does not like passing that. So I'm gonna change that color for you. Let's change this to here. It did not want to pass that fair value gap. The same fair value gap inside of an order block that things don't want to pass. So that one, another set of confluence. Coming back, passing through and cruising past this entire piece here. Once it had stopped below this, that was my point of like, okay, we're looking as if we're going south. Generally, not making it up to 50% and having a retracement down into this fair value gap. I would have liked a little more pressure into here, a little bit more oomph, but this is what gave me the interpretation that we would be going south through this to the 50%. And as we did a little bit of a retracement and finally broke through here at 805, this is where I was like, well, if I was gonna take a trade, it would be something into, again, a retracement, anywhere inside of that fair value gap. The higher up it goes, the lower my risk would have been because my stop would have been somewhere above that fair value gap. So that is a trade that, in my mind, could have been taken this morning if there was a little bit of volume. Yeah, I think if there had been a little bit, depending on news, I might have taken that as a low risk, you know, just done a few little couple of micros. Might have taken a few micros on that just for fun, just to get down to the 50 and see what's going through. But yeah, that's a special little one just for you guys. Yeah, going into the week, a couple of days there, not super fond of, that gonna have to be careful with. Do know how I'm gonna play them, probably afternoon session, so I can accord my morning accordingly, not be super involved if I have to leave early, but definitely check it out for the morning session, just because, why not? I like morning session better. Yeah, tomorrow and Friday are days to take a look at. And like I said, I'm looking for that fair value gap to give me some information. So as you can see, going for the north, hopefully we can get profitable this week. And yeah, good to have a game plan going into the week and do your best to stick to that game plan. At least that's what I always try to tell myself. Doesn't mean I always do, but I still try to tell myself. So let's see if we can keep being profitable this week. All right, guys, good luck, good trading.